Hello, hello, hello. So I wanted to talk a little bit about finances, something that I'm always talking to my kids about. It's that time they're graduating, getting into their college classes and everything, going to college. Soon to be getting into their careers where it's going to be a little bit of a time, a little bit more time, but eventually they're going to start trying to purchase things, get into possibly applying for things, listening to other people, getting email pop-ups about applying for credit cards and all these different things. And it is so difficult and tricky when it comes down to finances and credit and things like that. I wish I knew what I knew now. I really do. I made so many mistakes, and I constantly drill it into my kids, that they really need to pay attention when it comes down to trying to build their credit and things like that. Number one, people might not like this, not like the way I'm going to say this, but credit building is not for people that are broke. Okay, it's not something you start in order to pay your bills or in order to develop a stream of income. That's not what that's for, and that's not the time to do that. It's for when you've started to develop patterns of understanding how you make and save money. You have to have an income. And you don't start doing this stuff when you get a little bit of money in the bank. No, you don't do all it. You actually have to understand structure, saving money, and you have to be consistent with it. And during that time, if you can't pay cash for it, leave it there. Because this is not the time to go get a credit card and use that to pay for these little things that you want. Okay? The best time to do this is, again, whenever you're feeling a little comfortable with your finances, and you know that you're ready to start building your credit because you're making good money, because you're developing good habits and patterns, and you know what you're capable of. You know what's in your account at the end of the month. And if zero is in your account at the end of the month, then no, it's definitely not the time. Or if you're negative, not the time. So again, credit building is not for people who don't keep money, who don't manage money well. If you don't have money in your pocket, if you don't have money in your bank account, if you don't have a job where you constantly have money coming in, and even then, what are you spending it on? Have you maxed out your resources? I mean, if you're making $2,000 a month, is everything that you're paying for either close to that or over that already? Yeah, you probably need to leave the credit thing alone, because it sounds like as soon as you start doing anything, you're gonna screw it up anyway. Say you have an apartment. More than likely, they're going to run your credit. Okay, that's how you're gonna get that apartment, and that's kind of like 99% of the time. That's how that's gonna work, unless somebody personal that you know trust you and are gonna let you rent their place. Yeah, it's not how things work now. They're gonna run your credit. Okay, you're probably not gonna have much of anything right now, and really that's okay to start with. While you are paying for those monthly payments, while you're paying your monthly rent, most complexes don't really report it to the credit bureau. They don't. They don't report it until you mess up. They don't report it until after you've decided you can't pay them anymore. And so many months or whatever. I mean, first of all, 30 days eviction and all those. You have to make sure you understand the contract, because you're not going to be in there long anyway if you can't pay for it. But you can have your apartment complex, wherever you're staying, house, apartment, trailer, wherever it is. If you're paying somebody, a landlord, you can have them report those payments to the credit bureau. That's excellent. And that's excellent because that actually shows that you know how to make payments and you know how to make them on time. You can again, yeah, you can contact your landlord and let them know, hey, can you report my payments to the credit bureau? That's a plus. Okay, so once you've, depending on what all your other lifestyle, whatever else is going on in your life, first of all, have a schedule, have a plan, have a personal planner. Anything, any little personal planner, calendar, or anything will be great, for that. Kind of keeping up with your bills, understand who you're paying, how you're paying it. If things are, most people don't understand auto pay. Auto pay is when you elect to automatically have payments withdrawn from your account. If you're comfortable with that and you know that money's going to be there, that's fine. But you need to also have it written down manually. You need to have something that you can see by that sits by your desk or by your nightstand, or something that you can see that you're paying. This is coming out of my account, because you can become very comfortable with things that are coming out of your account. And you need to constantly go back to your account, whether you're logging into it or doing it over the phone or calling into the bank, whatever you need, whatever you're doing, make sure you understand what's coming out of your account. Scammers and everything like that, got to be careful with that kind of stuff too. Okay, so the biggest thing I wanted to talk about was, again, when to start building your credit. When you're comfortable with your income, when you're comfortable with your practices, you know how to pay bills. You have money to pay bills. You're not borrowing money all the time from family members. You're not quote unquote hustling to make it work, because these things are not secure. Okay, whatever you do is what you do, but this is not the time to go and apply for a credit card, or try to get a loan or something like that. Most people do get a loan when they don't have any money, and I guess that kind of makes sense. Okay, I want a loan because I don't, but can you pay it back? Can you pay it back times 3? Okay, because you're already going to have interest rates. So that additional money is going to come from you. That's not fictitious. So you're going to have to understand where your money is going to go. So security. Make sure you have a secure income. Okay. So job, secure income, support, financial support. Somebody who understands finances. Always somebody who can talk to you. The banks, a lot of the banks have people that can sit down and talk to you. Financial advisors, credit counseling, or different things like that. Get somebody that can continuously talk to you. You don't always have to pay for those people. I know it's hard sometimes to find people because you got to pay for everything. But guess what? However much they charge, consider what you're trying to do, and it might actually work out for you. If not, consider going to your local church, or consider, again, going to the bank, because the bank doesn't charge you to sit down and talk to you and say, hey, well, this is what we think. Here's a few pamphlets. They actually give you those pamphlets to help you understand, how to manage your credit and how to manage your finances. So that's a good thing. So make sure you get some type of financial advisor or some type of credit counselor or something like that. And this is beforehand. This is not at the last minute. Okay. Another thing is to research. Research what it is you want to do. For example, okay, I want to buy a car. All right. I'm very young. I'm just getting out of high school. I'm getting ready to go to college. And most of the time, that's the time when your parents are gonna kind of take care of you. But that's not always the case, because there are some parents who can't afford to do that for their children. Okay, the best thing to do there is actually, you know, your part-time job. And if your parents can help you, if they can assist with helping you get a vehicle and things like that, that's not the time to do anything with credit. Okay, that's the time to try to pay cash. You need to pay cash because you're not ready yet. For those of you who are ready, so I'm sorry. So those of you who are ready, who've gotten the job, who's managed the finances for, a year or two, and you know that you know how to pay bills, you know where your bills are coming from, you've got your little paper on the nightstand, you continuously monitor your account and things like that. This is for you. Okay, so do your research, understand where it's coming from, understand where you wanna get the loan, or get a car or something like that from. Let's back off the car, because to be honest with you, I feel like we should be paying cash for vehicles until our income is literally I mean, literally 3 or 4 times more than what we even need in life. That's Leave the car thing alone. Pay cash for your vehicles. Okay? If you're not making over $50,000 a year, pay cash for your vehicles. I'm sorry. It just is what it is. And 50,000 is not even a lot to some people. That's still considered to be well, middle class, or during their poverty in some areas. So, cash for the vehicles, okay? Let's go to something like building your credit, like a small credit card or a small line of credit. Okay, so you're making sure again that you can pay for it. You go get a small line of credit. So they're gonna start you out with $150 or $200, depending on what it is. This is with the mindset of building your credit now. This is not with the mindset of, oh my God, I'm broke, or oh my God, I need money for some new shoes or some new jewelry or something like that. This is not for that. This is for the true mindset of understanding that I need to build my credit so that whenever I get ready to go and get me a house, or if I want to open a business, my credit will show as being, really good. So you need to go and get a very small credit card or a very small line of credit. Within that, you're going to have a small payment monthly that you're going to have to pay, and they're going to have all that set up for you. Basically, whenever you get that information, whenever you start that, when you start that up, listen to everything they're telling you. Most people just do it online or do it over the phone, but I recommend that you go inside of a financial facility or something. I recommend you go inside the bank. I recommend you go inside the loan place, or wherever you're going. Go inside and talk to somebody physically so you can understand. Stay off your phone. Focus, because they're going to talk to you. Just some people talk to you so fast that you don't even know what's going on. And you're going to be like, okay, yes, sign. Now you've signed. You don't know what the interest rates are. You don't know. And you might borrow 100, but you might be paying back 3. You might be borrowing 200, you might be paying back 5 or 7. You're not sure what you're doing, so you need to listen. You need to pay attention, because those monthly payments, number one, are to show your credit bureau and the creditors that you can make payments. However, you are being charged for borrowing that money. You're being charged for having those accounts. Okay, you have interest. That means we're charging you for you to build a credit. We're charging you for you to have this account. We're charging you for you to have this asset or this car, this house. And so there's always something. So make sure you read. Understand policies and procedures. Understand terms and conditions. Understand late fees. Understand what happens if you don't pay. If your bill is due by the 6th of the month, you need to pay it on the 1st. Okay? If it's due by the 6th, more than likely you'll have a 5 to 10 day grace period, which means you have that much more time to get it in there before they actually report it as being late. Don't play with that. Don't even play in that window. The saying, if you're on time, you're late. If you're early, you're on time, but if you're on time, you're late. Okay, so that's kind of how that works in the credit world and paying bills. If you pay it early, then you've paid it on time. I recommend the minimum of 5 days early. Okay. And basically, if you're paying it on time, it's so close to being late, because it depends on how you paid it. How did you pay it? Did you have it mailed? Because if you had it mailed, then now you have to allocate for those 5 to 7 days that it's going to take to get to that company. Mind you, if you've spoken to the company ahead of time and asked them about what's called post-dated, a lot of times you can get your payments post-dated or your check post-dated, which means you mailed it on this day and it is actually considered as mailed. It's been stamped that it's actually going out. That does help, but that's actually a procrastinating spirit. I'm just going to tell you, like my mama would have told me, that's a procrastinating spirit, baby. Don't start that, because once you start that, it's hard to get away from it. Okay, so procrastination, it's not good for the nation. Okay, so try to do it ahead of time. Pay everything 5 days early. That's really important, especially if you're paying online. Again, a lot of those, oh my God, banks make so many mistakes, guys. Don't trust your bank to get your payment to a creditor on time. Please don't. First of all, they're going to let you go in there online and set your little stuff up. and, have it where that check can be automatically sent to that bank. Okay. Once you go in there and you get that set up, now you have to understand, you have to be knowledgeable about how early you need to send it. Most people think, oh, okay, so, because it'll have it by default, it'll have a little line that kind of says send by. So if you set it up for the 10th, it's probably not going to make it to the 13th. So if your bill is due on the 10th, don't put the 10th in there. Most of those have that little box at the bottom. It'll say it will deliver by. So if you put that number in the box and you put the date at the bottom, right underneath it, sometimes, not all the time, it should say will be delivered by. And so it's going to let you know it's going to be late. So therefore you have to go and back up a little bit, back up a few dates, and then it'll change and it'll say deliver by. So if it's due on the 10th and you're setting it up online, then you need to do it so it is scheduled to arrive at least 2 days early. That's not bad. So if you do it, let's say 5 days, if you set it up for the 5th, and then it literally tells you at the bottom that it's going to be delivered by the 8th, okay, that's cool. That's okay. But if you set it up for the 5th and it tells you delivered by the 10th and it's due on the 10th, then you need to back up a few days, maybe the 3rd or something like that. That's not bad. Anyway, banks make mistakes, deliveries, mailmen, all these different things, all these situations that your check has to go through, a mistake can be made in the process. And even if you have to call your bank and say, hey, I've mailed my check out, or it's scheduled to be mailed to you, please accept it if it's mailed, blah, 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 blah. Communication is very important when it comes down to credit, finances, or anything. You have to talk to somebody. I know a lot. It's easier just to kind of ignore people. I don't feel like talking to them. That's the reason I'm paying it online, so I don't have to talk to anybody. But you might want to make sure people understand who you are. Things happen all the time. We go through things. Last minute situations, emergencies. All these things happen all the time. So you have to be, you just have to be on top of things. You really do, because they don't know you. They don't know who you are. You're building a rapport with your companies. You're building a rapport with your creditors when you communicate with them. When you call them and talk to them and say, hey, I've mailed this off. For whatever reason, I'm hoping it won't be late. But if it is, it's actually already in the mail and it's been post-dated, stamped. You can ask the mail carriers or the representative at the post office. You can ask one of them to actually postmark it for you for that date. These are just a few things. I don't know everything because, gosh, I just know the mistakes that I made. I just know the things that I try to talk to my kids about. Something else that I wanted to mention is about the credit cards. Okay, so you have a credit limit of $100. You go in and buy a pair of shoes for $30 or $40, $50, $60, whatever. The rule of thumb is to make sure you can pay it out within that 30 days. I think that's very important. That's the only way to be sure, number one, you don't end up in a situation where you've either maxed out or now you're overdrawn or something like that. You have to, and you're going to have a monthly payment already. Okay, so you got like your little $15, $30 or whatever it is. You're going to have that regardless. You're going to have that as long as you have the credit card. But don't get to the point where you've charged more than you can afford. Interest rates come and they're recalculated for that next 30-day period. So understand that it'll be best to be back at zero, before that next, payment date. That way you can prevent the amount of interest that you're getting recalculated for the next time period. But make those payments. Making those payments shows your creditors and is reported to the credit bureau, and it shows that you can make payments, that you are responsible. Okay. Within 3 to 6 months, you're probably going to get an increase, and that's a good thing. That's credit increase on your card. You started out with 100 or 150, it might now go up to 300, and it's going to continue to happen. What happens is we become complacent. We become a little comfortable in what we've been doing. Things happen in our lives. People move into our lives. Things change. Oh, I'm making a little bit more at work, so I'm going to charge a little bit more. Or I've lost my job now, so I'm going to go buy some stuff with my credit card because I don't have no money. And no. First thing you need to do is call that credit company and let them know I've lost my job, because most companies have a protection policy, which means it protects you during those times that you can't make your payments. And this is the best thing for you to do. You can get those payments put off for up to 12 months, I believe it is. Just read your terms and conditions. It's very important. That seems like a lot of information in those pamphlets. Child, split that paragraph up into 5 weeks, or whatever you want to do. In multiple paragraphs, a paragraph a day or a paragraph a week. Just read it, because it's got a lot of information in there. It's got a lot of numbers you need to understand. You need to understand the percentage that you're going to be charged if you don't make that payment by the deadline. Okay, so just understand your numbers. Read. So if it's not paid on time, you will have a late fee. And another thing you need to be focusing on is, well, this is probably more of a basic credit session that will probably go with that. I'm gonna brief over it a little bit anyway. It's what is called debt ratio, and I don't know everything about it, but I do know this: your debt ratio, from my understanding, does not need to be below 30%. Above 30%. I'm sorry, it doesn't need to be above 30%. Meaning the amount of credit that you have available on your credit report needs to be higher than the amount that you've spent. I think I'm saying that the right way. So you have it's like a chart, and it shows the amount that you've charged or that you still owe, that you're still making payments on. And then it's going to show the amount that you actually have available. Those credit cards come in handy there. That means you don't have them maxed out. If you have a credit card that is $300, you don't need to have any more than $10 or $12 showing spent on that. I'm just saying. I mean, that seems a little low, but that's like, seriously, no more than $30, because you don't need to get past that 30%. And that's 30% across all of your bills. That's not just for one card. So you need to have kind of like a rule for yourself. Set it like a bar for yourself and say, okay, well, all my cards none of them are charged, not even, I don't know, a fourth, maybe just a fourth. I got this one that I owe this on, this one that I owe this on, but it's only a minute amount. $1,500 credit limit, totally different. I mean, you got a little bit more of a window that you have that you can spend in. But still, if you've made a few payments on that credit card for that $1,500, put it to the side. Don't charge anything else on it. Just leave it. Put it down. Put it down somewhere. Matter of fact, break it. That $1,500 credit availability is going to go great with your debt ratio, depending on what you already have on there. And if you don't have a lot, that's going to be great. So you're building, and that's small. You're building. And that's just one card. A lot of people want to just go get 5 or 6 cards. And again, if you're not good with managing your money, and you'll know this when it's time to pay something, if you're having a problem paying, getting a little bit of gas together for the next week or for the next month, you probably don't need to get a credit card. Just saying. You're having a problem paying your rent, you don't need to get a credit card. Okay? And if you're having a problem with any of this stuff, you don't even need a card that you're paying for. You need to save up some money to get one that you can pay cash for. So go get your little bicycle, little umbrella. They might laugh at you for a few months, but guess what? Eventually, you're going to have you a vehicle that you can drive up with. And while they're sitting there paying their $500 or $600 a month for something they can't even put gas in, see, you're going to be on your way to greatness. This is what I'm saying. So this is just a little minute, actually about 25 minutes of your time, just to kind of get you to understand. Please be careful with your credit. Please don't ruin your credit. I know we're going to have to go through a lot of mistakes. We're going to have to make a lot of mistakes, and that's going to, build here and there. But it's a lot of mistakes you don't have to make. When we were kids, it's a lot of mistakes we made just because we didn't want to listen to our parents. But this is a mistake you really don't have to make. Listen, read. When we were younger, we didn't have all of these, the videos to watch, and people always constantly talking about how to repair your credit and how to, well, repair. Obviously, if you repaired it, something got broken, right? So we ain't even talking about breaking it. Let's back up. How to build your credit. We ain't talking about repairing, because if you got something to repair, you know what you did to it, right? So let's not get there. Although you can read up on that too. That'll kind of let you understand what you're gonna face, and just in case you do make the mistake. But let's try not to make it. Don't be like me and countless other people who have done this, made big mistakes when it comes down to money. It's a lot I didn't know. So I'm just trying to share a little bit of what I know and the mistakes that I've made that I just didn't understand. And not only that, I started out very well, but I allowed somebody else to mess it up for me. Creditors don't care about that. They don't care about that. Like, so that's you. That's your responsibility. That's your name. That's your social security number. So you need to understand and be careful who you allow to be in your business, who you allow to have your personal information. Okay? So, bye. This is Celia Shay, and I'm out.